Beautiful stuff. Good afternoon, everybody, guys. I have missed every single one of you. As I promised to you, in August, we will spend some more time together. So today, this is a free live broadcast. If you want to catch me daily, then you obviously need to hit the links down below. That's in Premium Plus. Signals, copy trade, live market events, and so much more. That's all down below. Now, we have a ton to talk about. Now, obviously, I haven't seen you guys in a little while. I've missed you. So that's first things first. That's out of the way. But more than that, we're going to be breaking down a few things in the market. You're hearing a lot of things about, the worst day in Wall Street and the biggest, drop and the highest rate of volatility in 30, 40 years. We're going to break that down. There's quite a few factors to it, but I really want you to understand what it's about. And there's a lot of fear in the market right now. But if I break it down for you, you're going to understand exactly what is happening. Then over and above that, I'm going to be sharing with you an absolute secret, right? If after this, you're not printing money from the markets like an ATM, then I don't know. Throw away your PC, cancel your internet subscription, go live under a rock. Because after I show you what I show you today, it's pretty much going to be you printing money from the markets like an ATM, right? I'm going to be showing you a massive secret. A lot of people are sleeping on this. A lot of people just haven't put the time and effort in to have a look at it. And I decided I wanted to give it away to all of you absolutely free, right? So drop some love in the comments. Let me know where you're watching us from. A lot of people are going to be watching this after the fact. Once the live show is ended, this video will be available for you to watch today, tomorrow, next week, whenever. But when you do get in, drop some love, let us know where in the world you're joining us from, and just share the love as always. Okay, so let's start, right? No matter where you look in the world right now, you're going to see financial news that pretty much comes down to saying, hey, the markets have dropped, biggest, 1 or 2 day drop, and Wall Street has lost X and the big seven have lost a combined X amount of billion. But there's a few factors to this and we're going to break it down, right? So there's a few factors and a lot of people are speculating. A lot of people are trying to come up with reasonings for this. And sometimes the market doesn't need a specific reason, but a combination of a few, right? And we're in a sort of perfect storm type scenario. Now, once I get through this, remember, stay to the end because I'm going to give you that nugget and you don't want to miss it. You absolutely don't want to miss it. And who knows, the video might be taken down in a day or two, so you don't want to miss it. So a few things. So first and foremost, let's talk about the NFP jobs report data from Friday, right? So the NFP jobs report data ticked up in unemployment, right? And a lot of people are citing that to say, hey, unemployment is rising in the US, recession, all the rest of that. Now, I'm calling BS on that one because the Fed has been saying pretty much for the last 8 or 9 meetings, they needed the unemployment rates to tick high in the US to show balance in the labor market. They were speaking about the 4.5, 4.8% mark. And if you have a look at where we are from the data from Friday, we haven't ticked all too much higher from where we were, right? We had a previous rate of 4.1% unemployment in the US and 4.3 was printed, right? The non-farm payrolls was slightly unimpressive. Only 114 new thousand jobs in the US were created as opposed to the expectation of 175,000. But we've seen this before, right? NFP can be volatile. Numbers very rarely ever come in the way that they do. And there's small ticks down across the board. Okay, so in that case, we would see a weaker dollar and stock markets would surge. We did not see that, right? So a lower unemployment rate or a higher number of people that are unemployed would be a good thing for the stock markets, right? Because it points to the Fed to say, hey, look, everything that you've done, the interest rates that you've raised and hiked and kept at an elevated level are now paying off. Look, unemployment's ticking up, thus reduce interest rates. So I don't think it's that, right? The correlation there doesn't tie up. It should have been negative for the dollar and good for Wall Street, not negative for Wall Street. So that's the first item. The second item that a lot of people are speaking about is that it's the Fed, right? The Federal Reserve has not lowered interest rates quick enough, and they're basically waiting for the market to see pain before they do anything about it. Now, that one again, too, I'm not buying because the Federal Reserve has often said, hey, they will only lower interest rates when they see inflation is steadily coming down and all the data and the indicators are consistently pointing towards a yield or curve on inflation that is ticking down in a consistent manner, and the data must support the decision. They've been saying this. They've said this time and time, every single Fed meeting we've had, that's what they've been saying. So the fact that a lot of economists and a lot of people in Wall Street are saying, hey, but the Fed is being too hard for too long, I'm also not necessarily buying that. Now remember, the Federal Reserve, and just as a side note, right, the Federal Reserve has always said on their dot plot on their dot plot chart, and I never remember what that thing is in particular, that the likeliest point at which they will reduce interest rates would be September. Right now, that is going to have a monumental effect on the markets. Now, September interest rate meeting is only 6 weeks away. At the moment, there's almost 100% possibility, right? The majority of economists agree and believe interest rate cut will come in September. Now, it's not necessarily that will it not come in, but how by how much? That's the new discussion. Will it be 25 basis points or 0.25% or 50 basis points, 0.5%? So that's an inevitability. It's going to happen. It's inevitable. Now, that will be monumental for stock markets. Stock markets will surge. If you guys remember, we covered early in the year a huge breakdown of recessions, interest rates, hiking, interest rate cuts versus the power of the dollar versus stock market. And in summary, what we've learned is that interest rate hikes, right, are good for the dollar. It attracts local currency to the US dollar, and cuts are bad for the dollar. Inversely, interest rate hikes are bad for the stock market. Interest rate cuts are really good for the stock market. So the whole stock market is looking for the interest rate cut. And this data only supports an interest rate cut in September. So I'm ruling that one out too. Another option that is on the table that is in discussion right now and is probably the most blatant and probably in our faces is the AI boom, right? So as you guys know, ChatGPT started a lot of this process. AI became very real for a lot of people when ChatGPT came into the picture, and a lot of companies started just investing a ton of money into AI, into development, into hardware, into integration, and these companies received insane valuations. So every time a company's earning reports or quarterly, Q earning reports came out, they were showing, hey, listen, we didn't do too bad, but we have AI. We're investing billions, this is what's going to do. And that hype caused a lot of big names, big companies. NVIDIA is probably the most recent and most noteworthy that many of you will know about. It caused a huge surge in their valuations. Now that we're seeing a potential bubble, these same companies that are producing some of these earnings, right? The most recent one was Microsoft that said, hey, listen, our earnings are good. They weren't too bad, right? They met expectation. EPSs weren't too bad. Earnings per share are kind of in line with where economists thought, but they cited that we're not yet seeing the full return on our AI investment as yet, right? And it'll still take some time to mature. And subsequently, they just announced that they're cutting 15,000 jobs, right? That's Microsoft. That's a big number. Microsoft or Intel, I might be confused between the two, but one of the big names there. So that basically has shown that, listen, this AI boom and this surge around, just people pouring money into anything that has a label of AI. And you guys see it nowadays, everyone's selling an AI trading robot, which is absolute BS. But that absolute surge has kind of popped now, and that bubble's kind of come to an end. That is a very plausible option for the kick down that we've seen. I'm going to show you the kick down that we're seeing is not even really that bad. If you look at it over a bigger period, it's kind of within range. The other one is obviously politics, right? We obviously had Trump, we had Biden, and I'm not going to spend too much time on politics. I hate it outside of bringing Trump to dance on our screen. It is what it is. And, Trump was previously facing off against Biden, which was pretty much a no-brainer. He was basically debating a mummy, right? The guy could barely get a sentence out without, going into, zoning out. Now, Kamala Harris has obviously stepped in as his opponent, and she is getting quite a big uptick in votes on that particular space. Now, Trump was always seen as good for the markets, right? He stood behind Bitcoin. He stood behind, wealth. He's good for markets. We've seen it during his term. That's what the data shows, and that's what markets were expecting. Trump means better stock markets. Trump means an America that thrives a little bit more. That's the perception. Now that Kamala Harris is obviously stepping in, it shifts that perception a little bit. And polls currently are showing she's getting quite a bit of traction. Some would even say more than Trump at this particular point in time. So that is also a compounding effect to what we're busy seeing. The other item and the final item, which I think has, along with AI, the biggest likelihood of causing some of the downside movement, the sell-offs that we've seen, is something what we call a carryover, right? Or a carry trade, right? And essentially what a carry trade means, and this is what a large amount of wealth managers, wealth funds, stock markets Wall Street potentially do is they go to a country that has low interest rates, right? And this is typically Japan, Switzerland, very low interest rates. They borrow a large amount of capital and invest it into high yielding markets such as US stocks, bonds, etc. NASDAQ, S&P 500, Dow Jones. They invest into these areas. So they're taking the money out as a loan in a low interest rate environment, investing it in a high yielding place. Now, we obviously, I don't know if you guys don't know this, but BOJ, Bank of Japan, announced an emergency interest rate hike last week. Was it last night or last week? It was recent, right? Now, that interest rate hike means that all of these investors that are sitting in yielding assets, most typically in Wall Street and indices, sometimes in stocks and bonds and individual assets, they've now got a high interest rate on the other side of the fence. And so what this does is it causes a lot of investors to unwind, especially an emergency interest rate, because it causes panic and fear. Why would they need to all of a sudden raise interest rates? So that capital is being borrowed on the other side of the fence. In this particular case, a lot of money is being borrowed in Japan to be reinvested in US stock markets as part of these carry trade deals. They're trying to unbundle and de-risk their positions. And this means getting out of huge trades in fear for what could potentially happen for the future, de-risking themselves. Now, if you take all of these things that I've just mentioned, right, and there's quite a few factors here, you put them all together, you've got this nasty mix of a bunch of things busy happening. Okay, so that's why when you hear about people's opinions, it has to be one, has to be the other. I don't agree. I think it's a combination of these things. Some of it will be news, some of it will be bogus, some will just be getting people to run around in circles, but ultimately that's what it means. Now, Bank of Japan, as an example, right? Bank of Japan raising interest rates essentially shifts a lot of the attention back over to the dollar as a safe haven. So as a result of Bank of Japan announcing an emergency interest rate, this causes a bit of fear and panic there. The other place that people look for stability is the United States dollar. It's a world reserve currency. So we indirectly get an additional pump to the dollar in that situation that causes things like Bitcoin and stuff to fall. A lot of people were messaging me about crypto and saying, but wasn't this a safe haven for inflation, right? Shouldn't crypto go up in times of uncertainty? In this particular case, especially geographical uncertainty, like in Japan, the dollar becomes very attractive. A strong dollar is not good for crypto, right? A strong dollar means that crypto suffers. A weaker dollar, absolutely. So for all of you that are crypto fans out there, on that September interest rate cut, you're going to see something big happen on crypto, right? The second the dollar starts to tank or at least give back some of the value that it falsely attracted with these interest rate hikes, it's going to start to give back all that value. It's going to start to depreciate once again. Then you're going to see crypto really show us the potential and the legs that it's got. We've got a big focus on crypto coming in September in line with what's coming. So if you want to be a part of that, you want to be a part of Premium Plus, stick around, hit the link down below, and you'll be part of those shows and what it is that we do. Now, just to give you some perspective on what has happened on indices and what's just happened on the stock markets, I just want to show you guys here. Behind me, we have German 40, we've got US 30, otherwise known as Dow Jones, and then that one should be NASDAQ. Let me just switch over to NASDAQ. There we go. Okay, so if we have a look at this tumble that everybody's freaking out about, we're looking at just this moment in time, right? Which over the course, specifically on a 4-hour time frame, is fairly insignificant. I'm not saying it's small. It is definitely a big move, right? It is tantamount to, a 2-week move or 2-week distance from a sell-off perspective. But it has happened, and we've seen this time and time before, right? When we look at October, November, December of last year, primarily October, November, indices across the board were just skyrocketing. No one was celebrating, no one was saying anything, but the media and the markets thrive off of fear. So fear drives markets crazy and gets people super excited, right? So don't get caught up in the fear. Look at things from a data and analytics standpoint, and just look at the technicals, right? Ignore the rubbish, ignore the hype, just look at the data, and the data will save you. And this is why we say time and time again, price action remains king. Okay, so I know that was a lot. I had to break it down. A lot of people were messaging, asking me, and I've written different opinions, different times. So I thought, hey, let me just give you my personal opinion. Again, nothing we do here should be considered financial advice. It's all for educational and entertainment purposes. So take it for what it is with a pinch of salt. But I thought I'd just get this out there to every single one of you. Now, for this next part, I just want to make sure everybody's watching has dropped a comment. I want to see your comments. I want to see the love. because for this next part, right, I'm going to absolutely blow your minds. So if I see a few comments, I'm just going to give you guys a small bit. If I see a bunch of comments, a bunch of love, I'm going to give you everything, right? And this is really to make sure you guys can take your trading to the next level. Right now, again, we have Premium Plus, we have Signals, we have Copy Trade, we have education, we have live shows, we have all these things. But the most important thing for me is that a trader is able to look at the markets and themselves develop a strategy that looks at things step by step and says, all right, I understand what's happening. I see the pattern, I understand my risk, and I'm in a position to make some decisions myself. That's always been our greatest goal, is to empower people, not just to say, be reliant on us 24/7, but hey, here's some of the knowledge, here's some of the secrets, here's some of the tools that people use to build wealth in the markets. And if you follow this and you dedicate some time and hours to it, I cannot say in words how invaluable this can be to you. If you just invest a bit of time, put this strategy to use, guys, we'll be speaking. Every time I do something like this, every time I release something powerful, I get people that come back to me months later and say, you know what, that video changed my life. That video changed my finances. That video changed my success in the Forex and financial market. So I see a couple of people here, but still not enough. I'm not sure if people are too serious. I can see Daniel is watching all the way from Blantyre, Malawi. I can see Megan's in the house, Randani. I can see Petunia, Tamelo. Marcus Kruger's in the house as well with us. So welcome to every single one of you. Now, again, I don't care too much for social media and comments. It's always nice and I appreciate it, but I care about giving this thing out. Right, so let's break it down. Now, when we look at the markets, right, you look at different indices, different setups, right? Indices are expensive to trade, firstly, require a lot of margin, and the volatility is quite high. As you guys know, if you've been through my academy, if you haven't yet done so, down the link below, jump into our school environment. The first couple of videos are free. You can jump and you can watch that. But I generally recommend get into Forex alone. When I talk about Forex, I'm talking about currency pairs. And then when you look at currency pairs, I talk about get into the cheapest ones to trade, the most liquid assets that you can. These are your major pairs, Euro USD, GBP USD, these types of things, GBP, JPY, etc. Because they cost less to trade, meaning less margin requirements. They're easier to trade and they don't have as much volatility, right? So with that, I've come up with something very special that I want to share with you guys today. And I think a lot of the world is sleeping on this because everybody is so hyped up by robots and this and that. I'm going to show you how to destroy any robots in the market just by following what I'm about to teach you and show you. All right. So that's the first thing, right? Now, what we need to know about what we're going to be doing today, and this is a added benefit, is you want to be in a position where you understand at least one of the major currencies, singular, right? So behind me, we have the DXY, right? So this is the dollar index. So this is the dollar's performance against everything else. So the dollar's performance against the euro, the yen, the pound, etc. It's most heavily weighted against the euro, then the pound, then the yen, right? So it's weighted and looks at if the dollar is doing better than all of them, the dollar index will tick higher. The dollar is not doing so great against them, it'll tick lower. So it's basically like a smoothened out average of what the dollar is doing across the market. Got it? We're on the same page? Okay, I hope so. All right. So the first thing we need to do is understand where the dollar index is. Now, for those of you that are part of Premium Plus, I'm going to be publishing a step-by-step manual this week on this exact strategies. For those of you who want to take your trades to the next level and you want exact steps, what to look for, when to look for it, how to enter, everything, your risk management, we'll be publishing that to Premium Plus. So if you want to be part of that, the link is going to be down below. But I'm going to be giving that all to you now. So if you're going to put the effort in, you're going to get the value ahead of time. Okay, so we've got the dollar index behind us, right? Now, I'm looking at this on a 15-minute. You can choose to look at it any time frame you want, but I do suggest a 15-minute works well. So what can we see here, right? The dollar index, right, is in a bull trend. We can very clearly see that. You can see the bull trend. And what happens here, right? In most cases, the dollar index mostly shades its volume and shades its value in US trading hours, right? So when we look at any currency pair, the yen will move the most in the Asian session, right? The US dollar will move the most in the US session. And this is just the way the world works. In that session, it's when it's most traded, it's most dealt with. So when we break it down, we see, okay, the dollar index is moving slightly higher. That's the bigger trend. But have a look at these smaller trends that happen within the dollar index, right? We see markets come and push. So for the 13th of June, 14th of June, we see a lot of bull activity on the dollar index. Once that has come to a head, and you can really mark this out, you can really go deep into price action if you want to, but you can basically establish where that trend is dead. It then has to retrace and correct. Then we go into the next bull momentum. It has to retrace and correct the next bull momentum. Now, when you know which state the dollar index is, I want to show you something super, super powerful. A lot of people are trying to trade in the US session because they see the volatility. It's the wrong way to trade if you want to take advantage of dollar weakness or strength. Now, if you want this, and again, I'm going to be giving out my templates, my charts, my indicators for TradingView. If you want to see exactly what I'm seeing, again, I'm going to be giving that into Premium Plus. So a lot of people are going to message after, say, hey, can I have this? I'm telling you, you can, but it's in Premium Plus, just so you're aware, right? Now, what we're going to do is we're going to focus on Euro USD, right? Now, this is the secret that I want to tell you guys, and this is what I really want you to be able to benefit from, right? More than anything, all right? A lot of people sleep on different trading sessions, right? And they start trading when there's a ton of volatility. A trader doesn't get into a trade when there's all that volume, right? When we want to trade smart, we're trying to predict where the market will go, and then we want to get in before the volume comes out. So many of you know when we trade big events, when we trade, company quarterly earnings, when we trade something like NFP, which I don't enjoy, but we trade any financial data, we're trying to get in a position that is likely to be the eventual direction of where the market's going to go, long before it even gets there. So we want to be in a position, we want to manage our risk, we want to actually have our positions risk at entry by the time the volatility comes out. So when it happens, we've got zero risk and we're in favor to move and go forward, right? So I want to show you this. For this next part, I'm going to turn off my camera so you see the most amount of screen, and we can just dive into it and really, really get deep. So give me a second. Okay. So behind me, we have the Euro USD. Right? Now, what we have highlighted here, and I'm going to open this up, in the red sessions, right? This over here is the US trading session. Over here in the yellow is the Asian market specifically, right? And all I've done here is I'm using an indicator just to highlight the US session and the Asian market. That's all I care about right now. And what you will see, right, is that in this US session, that's where all the value is distributed, right? That's where we see all the value, we see all the volume, we see all that. But I don't want to get in a trade there, right? I don't want to get in a trade when CPI is coming out. I don't want to get in a trade where Trump is doing some crazy crap on the market. I don't want to do that. Have a look here. When you isolate the Asian session, right, specifically isolate that, all you have to do is isolate the Asian session. You've got to draw out that high and low. And listen, there's people that are sleeping on this that don't understand the power of it. Just isolate that Asian session. At 9 o'clock specifically, you will see volatility. Now, I'm adding this as you need to know this. At 9, you will see volatility. So if you see a little bit of a push into your zone, take it with a pinch of salt. You want to look at just after 9. You want to even look at 10. You just need to know that at 8 on the dot, 9 specifically, a bunch of volatility because we have a bunch of markets overlapping, right? We have Sydney that came to a close at 8. We've got the Tokyo session coming to a close at 9. We've got London session opening at 9. So at 9, you're seeing an influx of money into the markets. But the opening break of that structure will determine the rest of the day, particularly on something like Euro USD. So we have this Asian market session, right? We see there's nothing that happens here at 9. We see a little bit of a spike down there, and I'll zoom in for that. And just after that, at 10 o'clock, we see a breakout. We see, so that would be the entry point, basically zero risk. And then we see the market just take that market, take Euro USD and chew it up, right? Now, to give you an example, guys, that is 1,000 pips, right? 1,000 pips, okay? Not 100, not 200. We're talking about 1,000 pips, 1,000 pips on FX. That's tantamount to 10,000 pips on indices. So everybody's freaking out about indices. Everybody's trying to trade it live. Ignore it, right? This will basically turn the markets into an ATM for you. Let's have a look at the same thing here, right? So the next day. Now, again, you can correlate that through to the index. As we can see here, the dollar was strong. the dollar starts to lose value from about the 17th, and you really want to be in a trade or in a market that is trending and you can understand the direction of this. So we can see the dollar starts to lose momentum. We start to go into some sell side momentum, and that's what we want to start looking for potential trades there, right? The dollar loses momentum, it means buying activity on Euro USD. Remember, if the dollar loses momentum, Euro will buy more and more dollars, the chart will go up. So we'll really start diving deep from the 17th, but I just want to show you this until we get to the 17th, right? Here's the 13th of June. Yeah, so remember the dollar is still building up momentum. We have the Asian session. We clearly mark out what that range is, and then we have a look at where we get a break, right? So we get a break just before the US session starts. It breaks at that level there, and that runs for 180 odd pips in that direction, right? So massive trade. Let's just have a look there. Apologies, that runs there. I'm counting pipettes as well, which is obviously not the way to go there. So that one there just pushed out. So I did a straight run, directional run of smacking straight to the 20 pip mark. I just want to double check the pipettes. Let's just double check. Yeah. So that ran straight to the 20 pip mark. We got a retracement, and the general idea here is you want to look at the Asian market range, and that will be your risk, right? So example, if the Asian market range is sitting at, in this case, 15, 16 pips, you want to have an 18 to 20 pip stop loss, that when this trade breaks, your stop loss is above that range and you allow that range to run. Now, as that trade starts to fall, it even runs into the next day. So not only does it collapse through the US session, it collapses into the next trading day. So now let's look into Friday, the 14th, right? We have our Asian range. It breaks out cleanly and smoothly after that. There is no pullback whatsoever, right? A straight breakout and chases. Now, there's a further level to this dimension to these trades, and we'll get into that with Premium Plus in a later session of how to link these trades, how to allow them to run from session to session, and how to best manage your risk, right? Because one may think, all right, 20 pip stop loss, 60 pip TP as an example, you got a 1-to-3 risk reward ratio. That'll be great, that'll work. But in most cases, you want to take your profit at increments and you want to learn where to put your trailing stop. You want to learn how to do this. But basically what we're seeing here is, through every single day, one day, straight profit, no drawdown. Next day, straight profit, temporary drawdown. We moved into profit, probably hit the first TP, drew back, didn't hit stop loss, and then continued falling. Friday, same thing, Asian range presents itself. And where this is immensely powerful and where it works the best is where the Asian high or low also correlates with the dollar high or low, right? So as we can see here, if we have a look at the 13th of June, that is the dollar low, right? Extremely important for the day. That's the session low for the dollar. When we see that Asian range, we see the Asian range break out, and that is the low, right? As we sit at 8:30, 8:40, Asian markets come to an end at about 9 a.m. And then we see that complete push, that break, and that confirmation there, right? That continues to run. And you can just see that's money in the bank, right? A straight win, right? For 50, 60 pips there, right? Now, as we get into the 17th of June, right? And if we look at where the dollar is, we can see Friday, the 14th, we had that bull momentum on the dollar. So we were looking for sells. We were looking for sells on Euro USD because we have that longer dollar. That strong dollar. As we move into this territory of that weaker dollar, we're going to start to look for something else. We're going to start looking for buying activity. Remember, a weaker dollar means Euro USD moves to the top side. So dollar index starts to shift momentum, right? And this is going to start to trend. We don't know at this point in time. That's all we see at that point, right? We don't know yet whether that's going to trend, but we can see a break of structure, or we're starting to see the dollar index move outside of what is common to its current structure. So we're looking for dollar weakness, we're looking for Euro USD longs, right? So let's look at that, right? So now here's Monday, right? Have a look at what happens. Monday, we've got our Asian session. As I mentioned to you, 8 o'clock can be a little bit tricky, so I'll open that up a bit for mobile viewers. 8 can be a bit tricky. 9, you will see an influx of volume, but once 9 is cleared, we basically have zero drawdown, right? If you enter above the Asian range, you basically have an entry there. You have a slight drawdown, and remember, your risk would be the width of the Asian range. That's ideally where you want to position yourself in the safest way. So again, you want to make sure that your account can handle, even if it's 20 or 30 pips at a 0.03 minimum risk reward. at a standard lot, right? This is currency. You're looking at $10 per pip, right? So if you're trading a standard lot, you're talking about $20 per pip. So a 20 pip stop loss on a one lot account is going to be $200 as an example. But if you have a look at the reward, in a similar sense, we're risking $200, right? But our TP is sitting well into 30 odd plus dollars, right? So in this case, our stop loss was big because of the width of the market, but we're at least pushing towards that 35 pip range, which is a really good reward there. And what you'll see is the next day even continues. So even if you didn't take profit, right, you didn't close that trade, this trade runs into the next day, right? So let's have a look at the 19th, right? Similar thing here. We have the Asian market width that is there, right? Remember what I said about 9 o'clock, just be a little bit tricky about 9. This might have scared some people in terms of that pullback. The pullback does go a little bit below that Asian range. So you want to be a little bit careful there. And you might want to look at past highs and lows just to have a support and resistance. So this one doesn't look all too clean. And I can't, say with confidence that a lot of people would have passed this trade. But let's move on. The 20th of June, right? Where are we sitting on the 20th of June? From a price action perspective, right, we're still moving into that bear trajectory, but we're finding support, right? We have a long-term support on dollar index. So this might mean we might see some dollar strength start to come in, right? So dollar strength means we potentially and open to the idea of looking for some dollar strength, which will cause sell momentum on your USD. So let's have a look at the 20th. Right, we get that sell breakout there. The whole of the US session is a straight sell all the way through, right? So straight sell all the way through. Markets collapse nicely. Into the next session, same story, straight sell as we get some of that dollar strength. Now, the great thing is you don't need the index. You don't need the index to say, okay, I am looking for, but it helps to create a little bit of bias. It helps to help you understand, what are you looking for? You're looking for buyers, you're looking for sells. And you don't need that particularly. You can just look at, all right, this is my Asian range. This is what I'm seeing this currency pair doing. And what you'll find is in the Asian range is generally a sense of consolidation, right? So the US market will happen, cause a bunch of volatility. The rest of the world will try and consolidate Euro USD into a little package, right, over the Asian and Sydney timeframes. And once that comes to an end, once London takes over, we start to see a bit of new momentum take over. And in most cases, once London takes charge or takes control of that currency pair, it will play out into the US session. And that's what we're taking advantage of, right? We're taking advantage of an opening break of structure, right? Then we have a look here at the 24th of June, similar story. We've got the Asian range trying to break a little bit early. There are some tips and tricks for those of you who want to take this even further to make this more efficient. And that's by trimming the time. And I'll teach you guys a little bit later on how to do that to just get better entries, more efficient entries. And remember, when we talk about a stop loss being the width of the Asian session, that's just an absolute fail-safe way of dealing with it, right? Now, if we talk about reducing risk in the sense that, right, we know that in most cases when this plays out, and let's say it's got a 70 to 80% win ratio, then, if you're wrong, you want to be wrong quickly. You want to be wrong small. And if you're right, you want to be right big. And that's what I keep saying to people. You don't have to use the complete risk here of, whatever this may be, 20 or 30 pips. So in this case, it's 22 pips. You may find a happy medium of saying, hey, in this particular case, I find I get really good entries and I very rarely have drawdown. I'm going to take a risk of 15 pips, which may equate to about 2% of your account, meaning you can afford to take a bigger trade for bigger risk reward ratio, right? So we can see here, same story, boom, breakout straight, go straight to the 40 pip mark, double the previous range, would have doubled your risk reward ratio, depending on how you took profit over the course of this particular trade. Same thing, right? 25th of June. 25th of June, we are likely, let's have a look here. 25th of June, 24th of June is there. We're starting to see a similar change in the structure. And remember, guys, past analysis is always 20/20, right? You always have hindsight. You can always say, okay, well, I saw it was turning. And I see a lot of people doing big time analysis and massive Wall Street stock market, analysts saying, based on what we've seen. anyone can do hindsight analysis. It's always 2020. What I'm trying to show you is that this can be a tool that you can utilize in collaboration with actual utilizing the sessions and the breakouts, right? Manuel dos Santos asking, will this be available to watch later? Absolutely, it will. Absolutely 100%. If you're in Premium Plus. I think Manuel is in Premium Plus as well. So I think we're good there. Okay, so that assists us. We can see a breaker structure in the dollars momentum. We can see a little bit of a tipping point there. So I'm going into this particular trading session looking with a little bit of a bias, right? So as we get into the 24th, right, we're starting to look for, at some point in time, we're starting to look for a bunch of buying momentum. But the 25th, we see another great sell-off here, massive sell-off, barely any drawdown, nice reward. And again, what I want you to see is that in some cases, we move to multiple days, right? So example, on the 25th, we might have had a sell opportunity at that breaker structure that was running into the next day, right? That continued to move, that you ended up with a sell on the 25th. You ended up with a sell on the 26th, right? That was running all the way until you took a buy on the 27th. You would have closed up some of those sells. This would be an example of where you would need to manage a risk effectively, right? Not in the sense that you have drawdown because we didn't break out of the structure, right? We hit 8 o'clock, not too much happening, a little bit of a push, but it failed. Once 9 came to an end, we don't really get out of the structure until a little bit later. I think specifically the time here it would probably got us in at about 12 o'clock. 12 o'clock would have entered, slight pullback, nothing to write home or cry to granny about, less than a few pips, less than 10 pips, and then straight into profit, probably hitting TP there, right? Now that we move into the 20th of June, we're starting to look for some buying activity, some buying momentum, right? Now, again, as we get to the end of the month, we're going to see a lot of volatility. So we're starting to look for some buying momentum. We want price to clear this bracket. Now, I generally don't recommend entering on a break of time frame once the next time frame has started, right? So you ideally don't want to enter a break of an Asian session once the US session has started, because you're going to then basically be forfeiting all of the advantage of entering early by entering in a time when news, volatility, everything else is coming into play. So you want to kind of wait that out, and then you want to see where does that US session kind of steady out. In this particular case, it steadies out above that previous Asian range and ultimately takes off to the top side. So great trade, not too bad. Now, Monday, 1st of July, we obviously saw start of July was hectic. We started to see quarterly earnings, we see a bunch of different things. And so there it becomes quite choppy. We don't get a trade for that particular day just due to the fact that markets were quite choppy. We had a very big Asian range, a lot of consolidation. And you'll find that when there's a lot happening in the world and the Asian range is massive, those are the types of trades you want to be a little bit cautious. Sorry, Barkey's losing his nuggets. So when there's a lot of volatility in the world, a lot happening, Asian range will be wider, and that you want to approach with a little bit of caution. That's just a little bit of a pro tip to avoid getting stuck into trades you don't want to. 2nd of July, same thing, nice, beautiful breakout. 3rd of July, same thing, nice, beautiful breakout. 4th of July, nice, beautiful breakout. And you can keep on counting them, right? And eventually you'll have trades that run from session to session, right? So this is something that if you take seriously and you apply on a daily basis and you just look at, and it's so simple. It's not like you need to understand, Fibonacci arcs to be able to deploy this, or pivot points that are linked back to the square root of 6 divided by the current time of the day. It is simply looking at a zone, identifying place where price is consolidated, anticipating and understanding that the next session will have some volatility and reveal the market break for the next direction. If you take those two things together, you put them together, it can be so powerful for your trading. It literally means out of all those trades we just looked at, we basically covered a month and a half, there's maybe 1 or 2 that wouldn't work out. Every single day in profit, hitting TPs, right? So this is something you should not sleep on. If you want to take your trading game to another level, it is the cleanest on Euro USD. It is in many different places. There are many zones, there have correlations, stuff in the evening. There's a bunch more to that. So I'm going to be teaching, really making effort in Premium Plus to at least once a week give away something of immense value to our clients, to our traders around the world who have a desire and just want to improve their trading positions, right? Now, again, obviously everything here has to be followed with a good risk reward. Doesn't help you fully leverage an account. You get drawdown, you blow out, you say, Dane, I tried the strategy, it didn't work. Yeah, but you were an idiot, right? You have to use risk management. Risk management's key. It's the only thing that keeps you in this game for long to get to the point where you can be consistently profitable. And that's what this game is about. Nothing more, nothing less. That is what it's all about. For me, it's all about you guys. For me, it's about the clients, it's about the relationships, about you guys having a great time, unparalleled experience here with us than anywhere else in the world right now. And this is free, right? And a lot of people will sit and make all TikTok compilations and get you to pay for things and buy books just to maybe get 10% of this. And then they won't tell you the truth, because then why do you need them? Why would you need them if you could look at this? Now, we've got stacks more where this comes from. This is one of 40 things I could potentially show you to get your trading game to the next level. So there is one plug, and that plug is Premium Plus. Down below, we have an excellent trading partner, TD Markets, one of the best brokers I have ever dealt with. In the last decade, there's not been a broker in the world that comes close to TD Markets. Never mind their ethics, never mind the fact that they're STP, to conflict of interest trading, but they've just been tremendous. Now, we have a new person within the team. He's been with TD Markets forever. He's one of the most trusted people there. But if you guys get a call from Theo, he's in addition to the team, to Henk, to all the other guys, and he's really been dedicated to helping our clients get the best possible experience when it comes to their trading account. So if you open up an account down below, link is there. Open up an account. If you need any help, you can reach out to us. Theo will assist you. You're part of Premium Plus, you even get better assistance there. Theo will be inside school as well. So you can literally message him within school, and you've got a direct link to the broker to help you with whatever it is that you may need. And they've just been amazing. So thank you, Theo. Thank you, Henk. Thank you, Amar, for just giving us the best possible platform. We appreciate it. Outside of that, I've gone over my time budget by a good probably 20, 30 minutes. But I just want to end that off with, take it a bit seriously, a bit more seriously. Relook at this video, rewatch it, whatever the case may be. And I promise you, there are so many more secrets to the market that people are just sleeping on. Markets are tricky, markets are difficult, absolutely. But if you follow the rules, it's just a math game, right? You want to lose small, you want to win big, and you want to get consistent. If that's what you want, and you want to take it really seriously, as I mentioned, we've set up everything that you need down below to hold your hand in the market to take you to the next level. But if you're not sure, go and try this and come back to me. I promise you'll thank me a little bit later. So outside of that, guys, listen, we love you. We appreciate you. We're going to be looking at some signals this afternoon. Yesterday was a crazy day because of the aforementioned 5 other crazy things I just mentioned, but we do see markets bouncing back and getting to normal, and we continue killing it on our signals. There's an update on copy trade that we are busy working on. We're just tweaking some of the final details for the general copy trade. For those of you who are Apex clients from around the world, we have something pretty cool that we are implementing as well. So you should start seeing some pretty exciting things in the coming days. Outside of that, listen, we love you. I don't know what else more to say. We appreciate you. Have a great trading day. Stay safe out there. Until we see you a little bit later. Moshi, is there anything else? Nope. We love you. Goodbye.